And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way we can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or stock you want to go over together live, leave it in the comment section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, CPI came out this morning, hotter than expected. So everything is down, except the dollar, I guess. So all of our short call spreads are looking good today. Our only put is on CCJ, and that one is down with the rest of the market. But it is a commodity, so it might do okay here. I'm not worried. Let's go over it. XBI, we're trying to roll from February to March. We're trying to get it at 0, so just straight across roll. We'll see what happens. I know XBI is down today. Palantir, trying to get to 12. Marks at 20. We are up $4 on that. So far, so good. CCJ, we just talked about. Short put, trying to get to 18. Don't worry about this one so much. This is going to turn out fine. EFA trying to get to 21, bids at 22, marks at 24. We may get there even during the show today. We'll see. And our semi ETF, I know this is moving back in our favor as well. So far so good. No worries there. Let's find some new opportunities. A lot of earnings that came out yesterday and today, a lot of them aren't very liquid, so we're not going to go through a bunch of them, just a couple here and there. First up will be Shopify, okay? SHOP, down 9% or so. Looks like it's catching some support from back here in December. Bouncing already, very strong. Let's take a look on the put side. This is post-earnings move. You'd have to sell the 70. You get paid $76. That's not bad, actually. Good liquidity as well. You can see, though, we got red on both the put side and the call side. So, lost money, both sides. If you sold the 70 and bought the 65, let's do the math there. 76 minus 28 divided by 2 divided by 500, almost 5%. That's not bad. As far as Shopify goes, I'd rather sell the put spread than just the put right out. What was it again? Selling the 70, buying the 65. So 70's right here. There's some good support at 70 from back in July of 23, so let's keep that in mind. There's also some good support right around here at 74.50. That goes back to November, December-ish of last year. So like guidance. Let's come back. We'll mark this. Not crazy about it since it's had already such a big rally off the bottom. Let's look at Datadog next, DDOG. Post-earnings move, it looks like it's rallied back a lot already. So we may have missed the move on this one. Open down at 126, it's come all the way back. Put side, you'd have to sell 115. This seems fair. Same thing, look at this. So post-earnings, we've got red on the put side, red on the call side. So we've lost value because the move wasn't as big as that was priced into these option prices. So you would have wanted to have sold yesterday, which I don't like doing. So we don't want to sell anything today because it's already lost value on both sides. So what we're looking for post earnings is moves that are higher than it was priced in the options market. So you say it went down 20%, these would be green, these would obviously be red. And then today we would look to sell the put side. Since we got red on both sides, let's just skip it. You can still do it, But you've already missed the move. Okay? You see the solid line? We have the implied volatility is now lower than the 30-day average. So when volatility is low, you don't want to be selling options, okay? Volatility is really important. Okay? Let's move on. Coca-Cola, KO, flat. So same thing, red on the put side, red on the call side. It would have been great if Coca-Cola was down like 6%. Go ahead and sell puts all day on Coca-Cola. But as far as this goes, nothing to do here as well. Next, Comerica, CMA. This is a regional bank. Not an earnings move, I don't think. Earnings are April 18th. No news either, just down big. Let's take a look. Looks just like the chart of the KRE. Catching some support from back here in September and also December. You could make the case, if you do believe that this mini banking crisis is over and we're moving back up, today would be a great day to sell some puts again. Not very liquid though. Let's look at the KRE. Sure, it's down today. Down almost 4%. Put side, you'd want to sell the 42, and it's fairly priced. A lot of open interest here between the 40 all the way up to the 47. So great liquidity there. Let's take a look here at the chart. So this is the KRE. This is the regional bank ETF. Like I said, caught the bounce from September/November. If you think this is going to continue up now, today would be a great day to sell the put side. What did I say? Put side, you'd want to sell the 42. Where's 42 on the chart? 42 is right here. That seems very fair. You're also going to get a lot of support at the 42 from back here in October. You're also going to get a lot of support at the 200-day, which is around 44.50. And some support back here at 44 back in September and November of last year. So interesting. Volatility is on par with average. You can see here the solid line is higher than the dotted line, so these are more expensive than normal. There's that. Not bad. This one's interesting. It's very interesting. Volatility's okay. Liquidity's great. I'll mark the KRE. I have written down here KRE at 45. We're not there yet. Let's move on. Next will be Enphase, ENPH. Down 6% today. This is a solar company. Their earnings are on April 23rd, so we've got some time. Yesterday, we must admit, we didn't look at this yesterday. Hit the 200-day moving average yesterday, bounced down, and is now down 6% today. So yesterday would have been a great opportunity to sell the call side. We didn't check this yesterday, so that's my bad for missing it. Gapped up after earnings, moved up, hit 200-day, and bounced down. My bad on that one. Sorry about that. That would have been an easy one. Oops. Oliver Stone asks, what's more important, liquidity or high volatility? They're both important. Actually, they're both equally as important. I'd say no, not one is more important than the other. Volatility, that's where we start our journey. So whenever, like, we go through our IV rank scanner, what it's doing is it's looking for stocks that have a higher than usual volatility for the past 30 days. And same thing when you look at an option chain here on E-Trade, same thing as 30-day average versus currently what's volatility that's priced into the options market for this individual stock. So like Enphase, for example, the solid line, the 30-day average is below the implied volatility of right now is below the 30-day average, okay? And then as far as liquidity goes, liquidity is also very important because liquidity helps you get filled. And if you need to roll, like we're trying to do here with XBI, liquidity is important when it comes to rolling or closing if you just want to get out of a trade and take a loss. That's also important. So when you're out here out of the money, like say the 90 strike and the put side for Enphase, you've got a 4-cent spread. That's great. It's easy to get filled, easy to close, easy to roll. As you get more into the money, you can see there's less volume. And like say the 135 has a dollar-wide spread. So as this goes into the money, it gets less and less liquid. So that's why you want to start off with something that's liquid. So as you approach at the money, it gets slightly less liquid. If you start with something that's illiquid, it gets even worse as you get in the money. So always we want to start with something that's very liquid. Okay? So both, I would say not one is more important than the other. Good question though. One's not more important than the other. They're both very important, liquidity and high volatility. But start your journey, whenever you're looking for something to sell, start your journey with high volatility, okay? That's why we always check things like what's in the news, because if something's in the news that morning, it wasn't priced into the market the day before. For example, we're going to talk about JetBlue today. Carl Icahn has taken a stake in JetBlue. That wasn't in the news yesterday, but it is today. So that was an unknown, and it's made the market move for JetBlue, okay? So both important. Oliver, great question. Back to Enphase. We could sell the put side. I don't know if I'd want to, though. I think we missed the move on this one. You would have wanted to sell the call side yesterday. Let's move on. Etsy, ETSY, down 6% today. Earnings are February 21st, so we're too close to earnings on this one. We'll have to wait till after earnings, which will be, what, in a week or so? Next week, we'll follow up with Etsy. Down 6% today. Heightened volatility across the curve. Earnings are next week, so this will have the highest of volatility. Put side, the 60 pays you 100. That's fair. Call side, you'd want to sell the 90 and buy the 95. There you go. Let's wait till after earnings, though, okay? JetBlue, JBLU is next. So, like I said this morning, Carl Icahn has taken a stake in JetBlue. This one is a little baffling to me. I don't know why of all the things you'd pick JetBlue, but he did. So here's JetBlue. Ugly looking chart here. On its way to bankruptcy. Tried to take over Spirit Airlines. Got blocked. They're appealing, I think, or the appeal has been blocked. I can't remember. But not a great company. Hitting a lot of resistance from back here in April. Next stop for resistance will be around 750 from back here in November of 22, and the next spot for resistance is 785 or so. Okay, so if we want to sell the call side, let's move past 785. Call side, you'd have to sell 8 and buy 9, and you're not going to get paid for it. You get $10 for that spread. Close. Close, but no cigar. So, Oliver, you can see the implied volatility is up today across the curve. I bet you this was lower than normal yesterday, just because we got some news here. So, all the option prices today from February all the way out to March 22nd expiration are now higher. So, these are more expensive today. Let's move on. Let's take a look at the TLT. We haven't looked at the TLT in a long time. We had CPI this morning, hotter than normal. So, remember we sold the call spread somewhere around December. I can't remember. Made our money. Easy trade. I don't know. Could catch support. Could catch support around here, actually. We got support back here in October of 22. Support back here of, August of 23. You could make a case for selling the put side here around 92.30. Right now we're at 92.80. Let's take a look. Put side for March expiration. April is 67 days. We're still too far out to start selling April, but we're getting close. March put side, you'd have to sell 89. You paid 38. That's not that great. If you want to do the spread, buy 87 or 86. Let's do 89. Sell the 89, buy the 86. What do you get? 37 minus 12 divided by 2 divided by 300. 4% on the put side. On the call side, if you sold the 97 and bought the 99, let's do the math. 33 minus 14 divided by 2 divided by 200. 4.7% there. So equally priced on the call and the put side. And that makes sense. No one's really buying either side with vigor because it's just hanging out in no man's land. Could it continue this move down? Absolutely. Could it get that bounce here at 92.30? Sure, and continue the move up. This October low, when the 10-year got to around 5%, could have been a great bottom. So this could be making the sideward bottoming pattern to move back up. Again, who knows? I don't. So if I had to guess, continued movement to the downside. Okay, there you go. That's that. Hold on this one. Next up, DraftKings, DKNG. They were down more earlier. Looks like they're rallying back. Their earnings, I think, are on the 15th. So 2 days till earnings. That's right. Maintained overweight at Piper Sandler. And we got a price adjustment from 255 from 44. That was the news here today. 55 is pretty far out, man. A lot of upside. And it was down, so I did want to look at the put side. But since it's already rallied back and we've got earnings in 2 days, check it out. If post-earnings we were down big, say all the way down to like 33 or something, we'll go ahead and sell the put side after earnings. But let's wait and see. If you wanted to sell the put side today before earnings, you would need to sell the 34. Yeah, so like I said, 33 is where I would have thought, but 34 is where the options market is pricing it in. So if I was guessing 33 and they priced it at 34, it's pretty much priced to perfection. If anything, skew to the call side. Is that right? 35 is paying you 57, call side. The 50 is paying you 115. You need some strikes here between 50 and 55 on the call side. The 50 is a little too close. The 55 is way too far out to sell. This thing is mostly priced perfect for earnings. We'll see what happens. We'll come back afterwards, okay? Next up, we'll skip Tesla. Is Tesla down? TSLA? Maybe. Not enough, though. Waiting for Tesla to get to 165. It's not there yet. Next, Pepsi. Waiting for 166. Is that right? Good morning. Curious, why would you prefer the monthly expiration versus weeklies around that monthly? Usually, the weeklies are less liquid. So let's take a look at Pepsi, since we're here. So let's look at the 160 strike at Pepsi on the monthly for March. So this is the monthly, great liquidity. The 160 has a spread of 3 cents. Let's pick one of the weeklies. Let's go to the March 8th. The 160, slightly less liquid, 4 cents. Let's take a look at the 28th. You'll also have less volume. The 160 here, 83.94. So look at the volume here too. For the March 28th, 44 days out, that's actually where you'd want to be. We have hardly any volume here, hardly any open interest. Okay? If you look at the monthly, we got a lot more open interest and more volume. So the weeklies have less liquidity, essentially. Why would you prefer the monthly expiration versus around that month? So yeah, and we want to be, when we open new positions, we want to be anywhere from 40 to 50 days out till expiration. So we're in that weird spot, Bill, where the March is 32 days till expiration. That's closer to 40. The April is 67 days till expiration. That's farther away than 50. So you want to be between 40 and 50 days till expiration. We're still trading March. As we get closer to April expiration, we'll switch as this gets around to around 60 days till expiration. Okay? But ideally, that range between 40 and 50 days opening new position as you count down from 50 down to 0. If you look at the where's my finger? If you look at your option expiration curve, it goes like this with premium. You get the most decay and you get the most, so you make the most money the fastest during that time period. That's the simplest way to explain it. You have the best chance of making the most money during that time period. Okay? Good question. Next up. So Pepsi will wait till it gets around to 166 to sell the put side. Not there yet. And it's kind of, I don't know if volatility's there yet either. Still showing a little bit of volatility post earnings. And the curve here, it's still, for the March, still has some, it's fairly priced. That's what I can say. Let's move on. IWM, I know it's down today. I wanted to sell the call spread at 210, so let's just skip it. ARM, that had a monster day yesterday. I know we're looking at selling the call side on ARM, but man, this thing's cuckoo. So 3 days after earnings, when we talked about it in the show yesterday, I think it was at like 125. If we sold the call side, I think we were looking at the 180 strike. It almost got there yesterday. Again, we do this show early in the session. By midday, this probably was up here at 163. You would want to sell the call side then, but again, who would have guessed? Who knows? Down 14% today. So if you did sell the call side, looking a little bit better. Today, the 185, a lot of volume. Your open interest falls off a cliff at 185. These are all newer, because I remember a couple days ago, I said there weren't enough strikes to sell on the call side. Now there are. So you have more strikes from the 190 down to the 240. You have some volume today, but these were just added, so they're a lot less liquid. 60 cents spread here at the 210. These are don't get me wrong, these are very expensive. But the put side, you'd want to sell the 70. Look, so the 70 is where you'd want to be. A lot of open interest, 15.9 thousand. A lot of volume, 562. Great spread, 3 cent spread here. The 70 is where you want to be on the put side. 70 on the chart. It's way down here. This one's really interesting. I like this one. If you want to sell, yeah, I'd sell this. Obviously, this thing is going to come down, so know that. You'd want to sell the 70 on the put side. It's tempting. And we're past earnings, too. $70. You get paid $88. What's the spread like? 70, 65. Let's do the spread really quick. 88 minus 50. Divided by 2, divided by 500. Only 3.8. So If you've got the $7,000 to cash secure it, maybe sell the 70. This one's tempting. I like this one. Man, oh man. The thing is, you know this is coming down. Will it come all the way down to 70 in the next 30 days? Maybe. Hold on really quick. The 70 pays you 88. The 180 pays you 990. Jesus. Holy smokes, these are really expensive. So on the call side, you'd want to sell the 180, you get paid 990 bucks. Man. 185 on the chart. 185. So on the call side, what's happening is all the big institution people are selling this one naked, and all the dumb retail people are buying it. Son of a gun. Call side, you'd want to sell the 185. You have to do the spread. Don't sell the call side naked. Sell 185. We're going to buy. You'd have to, as far as the numbers go, you'd want to sell 185 and buy 210. Liquidity's not the best, though, down here at the 210. Put side, that one's much easier. You sell the 70. This one's fascinating. Let's move on. Pinterest, PINS. Trying to look for 32.5. It's flat today. Opened up down, has come rallying back on the right track to 32.5. 32.5. Where's 32.5? 32.5 is right here. A lot of support at 29/30. 29.50. Great support there. On the put side, where do you go? You'd have to sell the 32. And you only get 26 bucks. A lot of open interest at the 32. A lot of volume at the 32. That's where you want to be on the put side. On the call side, 39 is where it's at. Sell 39 and buy 41. Calculator. 39. That's 39 minus 17 divided by 2 divided by 200. 5.5% there on the call side. This one's fairly priced. Next up, Alcoa. Is it down? We're getting there. Down 5.6%. We're trying to look for 25 for Alcoa. We're post earnings. Not till April 17th. And we're still trading March. I was waiting for 25. 25's down here. So it's broken down below this January 19th low. We'll see how it closes today. I was waiting for it to break down. I want to catch the next bounce, which I'm guessing is around 25. Next bounce for sure, 24.21. If it breaks below there, $21.85, going back here. I know the chart doesn't look good. I'm trying to catch these bounces on the way down. And if we're going into recession, Alcoa is a steel company. So if we're going into recession, globally steel demand will go down, which means Alcoa will go down with it. But if the response to that recession is printing a lot of money, like what happened back here in 2020, it'll go crazy up to the upside. So that's where we're at with Alcoa. Dividend on Alcoa is 1.43. That's not bad. Close, but not there yet. All right, cool. Let's go to our IV rank scanner and we'll sort by volume. Got a little bit of volatility priced into the SPY. That's for obvious reasons today. Let's take a look. So pullback, it'll catch support around 478. We're not there yet. If we do get a good pullback here in the overall market, bouncing here at 478, sell the put side at 478. I'll put this on the list actually. If this sell-off continues for the rest of this week, SPY, what do you say? Let's go 479. Okay. Not there yet. IWM, 81%. Let's take a look. In the middle of nowhere, this could be double top action here, so we could be coming back down. A lot of these chart patterns don't hold, so I don't really care much, but we do have this big bottom that's been forming, and it's trying to go to the upside with a lot of resistance at 210. We're kind of in no man's land here. Hard to say. Directionally, I have no opinion. Put side, you'd have to sell the 183 and buy the 177. Let's do the math. 116 minus 64 divided by 2 divided by 600, 4.3 on the put side. The call side's probably where it's at. You'd have to sell 208 and buy 215. That's a $700 spread. 138 minus 53 divided by 2 divided by 700, 6% on the call side. So we have some call skew. $209 on the chart. Actually, that's interesting. So I'm expecting resistance at 210. The call side's pricing in 209 to sell. Almost on point. Fascinating. Pass. Sometimes the market is just perfectly priced. Right now, the IWM is perfectly priced. There's not really an edge. NVIDIA earnings on the 21st. Palantir. We have our Palantir position open. It should close today, maybe, no? No, not that. That was EFA. PLTR. We are short the 28 and long the 30. Opened it back here on the 8th. Opened up down, but it's rallying back today. So if you're not in this one, hard to say. On the put side, you'd want to sell the 20. And that's got some juice to it. It's not bad. On the call side today, you'd want to sell. You'd still want to sell the 28 and you'd want to buy the 30. So same trade on this one. Next. AMD. I'm already short the semiconductor ETF, but let's take a look at AMD. Interesting. Earnings are on April 30th. We've got plenty of time. Just chilling out at all-time highs. I have no bias on this one. Put side, you'd want to sell 150. Great liquidity here. 150, yeah, a lot of. So look at the open interest at the 150, 145. That's your spread right there. Sell 150, buy 145. I don't know if it's worth it. That's 60 divided by 2 divided by 500. 6% on the nose. That's actually not bad. 150 on the chart. right here, and you're going to get good support at 150. Same thing, this one's perfectly priced. Sell the put spread, you'd want to sell the 1. Make sure you get this right. Sell the 150, buy the 145, 6% return. Should get a bounce at 150. Call side. This probably pays more for the call side, I'm guessing. Call side, you want to sell 195 and buy 200. Let's do the math. 298 minus 225 divided by 2 divided by 500, 7.3. So there's still some call skew. You get paid more to sell the call spread. 195 on the chart. 195 is right here. That seems, we got what, 32 days till expiration? That seems fair. Seems fair. Next. ARM we already looked at. Tempting on ARM, very tempting. Shopify we already looked at. I highlighted it. We'll follow up tomorrow. Ford, pass. Coca-Cola, I wish it was down more. It's not. My buddy texted me, KO to the moon. Robinhood, no. PayPal. Let's take a look at PayPal. What the hell? Down 3% today, PayPal. Post earnings gap down. Rally up, down again today. Shows IV rank of 0, maybe. Did have a big jump up in volatility after earnings. Skip this one. The put side, you'd have to. The 52.50 is a little close. Can you spell out the formula you use for your profit calculation? I couldn't figure out why you divide by 2. I divide by 2 because when I get something filled, here, let's take Palantir for example. Palantir, my cost basis, when I opened it, I got filled at 25. So when I want to close it, I want to take half. So I'm going to divide 25 by 2. That's 12.5. Round it down. So I've got the buy to close order at 12. Okay? That's why I divide by 2. What I'm doing, let me do one here example. For PayPal, on the call side, I'd want to sell the 60 and buy the 70. Okay, so it's a 500. These are loose numbers. It's not actually 500. It's 500 minus the credit you receive. But I want to move fast here. So just to keep the pace going. Otherwise, it'll be a 4-hour show. So I just use 500 as the 65-70 spread because that's really what you have at risk. You're not risking more than $500 because say worst case scenario, this blows past the 70 and you lose the entire spread. You're out $500 minus the credit you receive. So the credit you receive from this one, let's do the math. 65 is 62 minus the 70 strike is 26. So the credit you're receiving if you sold the 65 and bought the 70 is $36. Okay? So you receive $36. If you want to know your true risk, it's $500 minus 36. Okay? So what's 500 minus 36? 500 minus 36. You're technically risking $464 if you sold this call spread. That's your max loss. You can't lose any more than that. If PayPal goes to a price of $400 a share, the most you're going to lose is $464. Okay, so if you've got a $1,000 account, you're still in the game. You can still play. All right. So back to that $36. If you sold the 65 and bought the 70, you've got your $36 you receive in credit. Divide that by 2, and you get 18. So if that short call spread got filled, you'd want to set your buy to close order at $18. That's your divided by 2, okay? So AKA, that's why you divide by 2. If I sold a straight out put, say I sold the 55 put here, okay? You receive a credit of 106. It's not a put spread, it's just the put. You're cash securing it with $5,500 and you're receiving a credit of $106. I would want to close that position 106 divided by 2 at $53. Let's take a look at our CCJ put. Let's go to CCJ really quick. CCJ. God darn it. So I am short the 40. I am risking $4,000 technically, cash secured. If they go under, they go bankrupt, I lose my $4,000. Probably not going to happen. But I received a credit, if you see on my CCJ position. My cost basis is $37. So I received a credit of $37. 37 divided by 2 is 18. I have my buy to close order here for my position at $18. Okay? That's your divided by 2. Thanks, Bill. Thanks, AKA. Thanks, Oliver. Good discussion today so far. All right? Back to the list. I wish I had 4 hours. We all got to go to work, guys. Ford, no. Coca-Cola, I wish. I wish Coca-Cola was down 10% today. I wish. PayPal, we already looked at. Bank of America, down 2%. No. The KRE we already looked at. Coinbase on the 15th. Rivian on the 21st. Pfizer, I hate Pfizer. Riot, JetBlue we already talked about. Semiconductor ETF, already in that one. XBI, down 4%. I'm short the 85, long the 90, so half the spread's back out of the money. This is a tough one. This XBI one's annoyed the hell out of me. XLU, let's take a look. Interesting. Caught this bounce here briefly. Oh, lordy. Next bounce is at 57. So this one probably has room to run. Maybe 57.50. Put side, you'd want to sell the 56. This thing's priced to perfection. I'd skip the put side. Call side, you want to sell the 62. And you buy the 64. 34 minus 9. 34 minus 9 divided by 2 divided by 200. That's interesting. 6% if you sold a $200 wide call spread. If you sold the 62 and bought the 64. 62 is right here. That's awfully close. That's why you're getting paid 6% though. Interesting. I'll pass. Taiwan Semi. They must have earnings coming up. End phase. We missed the call spread on that one. My bad. Next up. Baba. No. Carvana on the 22nd. The GDX. Let's take a look at gold in a second here. Intel. Oof. Lyft today after the close. Micron. It's a semi-play. Boeing. Boeing's going sideways. Uber. Let's take a look at GLD, then Uber. GLD. Interesting. We gotta wait for this blue line to creep up. We sold the gold call side back in October. We made our money. I think we sold the call side again in December. We gotta wait for this blue line to go back up. Showing an IV rank of 0. That could be true. Yeah. You don't want to sell gold yet. Hang on tight for gold. Uber, UBER. When are earnings here? May 7th. Okay. Doesn't show any volatility on this one. Skip this one. Clean Spark. AI. We got Square coming up next week or so. Goldman. Too big. Maybe JP Morgan. JPM. Ah, interesting. Maintained it neutral yesterday. Here's your chart. It's a tough chart. It's a tough chart. On the put side, you'd want to sell 165. That's awfully close, so you don't really get paid for it. Call side, you'd want to sell the 185, and same thing, you don't get paid for it. Pass. Where's 185? 185 is right about here. That seems fair. This one's fair. Upstart. Upstarts today after the close. We'll follow up tomorrow. ARC getting up there. What did we say? ARC at 46 or something? ARKK. Good liquidity on this one, I know. Yeah, we wanted it down to 40. No, even farther. I wanted it down to 40. Maybe a bounce. I already got this bounce here. So next stop down is 41 or so. Not even close. Citigroup? Nope. Barrick Gold. I think we got Newmont and Barrick Gold's earning are coming up. If Newmont's down big, we'll sell puts on Newmont. We'll wait. New York Community Bank is down again. I know they were up past couple days. That one's too tough. It's interesting, but too tough. Marvell. DraftKings we already looked at. We're almost done here. American Airlines, no. XHB, the home builders. We traded that one before. XHB. Let's take a look. We sold a call spread here somewhere. I can't remember. Today, not so obvious. You can make the case for selling the call side again. This was a blow off top, and now it's going to start coming back down. I could see that. We've got this ascending trend line. It's a lot of momentum to the upside, so you can have this trend line continue here to the upside. You can make the argument there. Since it's too hard, I'm going to skip it. But the numbers for the put side, you want to sell the 91. You only get paid 75 bucks, so that's not great. Call side, sell the 104 and buy the 107 or 108. I'm going to skip this one. Too hard. Airbnb today after the close. We'll follow up tomorrow. The K-Web, pass. Oxy tomorrow. CrowdStrike. What is the date today? 13th? We're too close to these earnings. Path, GI. Lattice up 5%. Cisco on the 14th. So Cisco we got tomorrow after the close. Maybe one or two more than we're going to call for today. Newmont. Newmont is the 22nd before the open. Applied Materials coming up. Pass, pass. Oracle we looked at yesterday. That's a no. China. EFA? We're already in that one. Adobe. Let's take a look at EFA. Maybe. Walgreens. We're kind of getting to the bottom of the barrel here now. Let's take a look at EFA and then we'll call it for today. So I'm in this one. EFA. So we sold the call side somewhere here. When do we open this one? EFA. January 25th. So January 25th, right on this day, we saw the call spread here. We're pretty much flat as far as the chart goes. EFA, we're up 14 bucks. So this is the one I was talking about, may close soon. Was down more today. One more down day and this thing will close. So even though the chart has moved sideways, it's pretty much at the same exact price where it was when we opened it. This is all theta decay. It's $14 worth of theta decay. However, today, it's fairly priced. Put side, you'd want to sell the 72. I'd skip the put side, not worth it. Call side, same thing. You'd have to sell the 77 and buy the 79. What do you get there? 33 minus 6 divided by 2 divided by 200, 6.7. So if I didn't have this position open, I would jump in and still sell the same spread. Sell the 77 and buy the 79. You get 13 times 2 EFA. Not that great of a spread, but I'm trying to get $21. You'd only get 13. Cool. I think we'll do it for today. Got a lot done. Portfolio overall looks good. We'll see what happens with the semiconductor ETF and XBI if it can roll by the end. If we've got Friday expiration for February, XBI is a February expiration. So if it gets filled, great. If it doesn't, we'll go over everything on Friday. Thanks so much for watching. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also tell your friends who are trading to tune in as well. Like, subscribe, all that good stuff. All right. Good market movement today after CPI. Got some volatility spiking. We'll see if we can continue to move up. We'll sell a lot more then. All right. See you all tomorrow. Have a great day.